Hello and good evening, everyone. This is TraderSwift. It's Sunday, August 11th, and I'm going to give a quick weekend market update. All right. Well, we had a lot of action last week. Monday morning, we did come down strong. We opened very low, but throughout the remainder of the week, we did recover some, and we stayed up there on Friday. So that's that's I guess that's something to be excited about. We're not tanking, so that's good. But the big thing I wanted to talk about today is the importance of keeping an open mind. All of last week, when we did take this huge decline and then open low on Monday, it was pretty much doom and gloom for everyone. We were talking about retracements. With more downside action, and that could very well be the case. We came down last week. We were tracing up. I talked about the Fibonacci retracements, where we could be retracing up to. Whoops, I did that backwards. We were traced up from the past the 0.50 level to the point. Now we're approaching the 0.618 level. Fibonacci here. We're almost there, and this could be the end of our retracement. So it's very feasible that tomorrow we do open lower. We can continue down throughout the week, and then eventually, if we break this low, we would have a completed ABC structure to the downside with a target here on the spines around the 273 area. So what that would look like is we go down, we retrace up to 0.618 level, we cross that B point here at that previous low, and then we continue to the downside back to that prior swing point. This is very possible. As I've said a couple times last week, that retracements aren't always in a straight line. It may go up and come straight back down. It may also kind of hang out. It may zigzag a bit. It may there may be a longer period of consolidation, and then eventually roll over to the downside. So that's definitely within the realm of possibilities. If we do look at the prior correction that we had in May, we did come down strong, retraced up, and then continued back down to that prior level. So the question is it going to test that level again? Maybe, maybe not. Our job here is not necessarily to predict, but to analyze what are the possibilities and then have a plan based on each of those possibilities. So the other, that was the scenario we were talking about last week. But I do want to bring up one other scenario, which is the more bullish scenario, and that would be taking this prior low point up to the highs and then treating this downside as a retracement from that prior, if we were going to continue our upward momentum, and then continue to the upside, with that being the B point, and then having a much higher price target at that point. And oops. And if we do hit that, we're gonna cross that B point here, and the market is going to be booming. It's going to be breaking out the new highs, and that very well could be it. If we want to look at that same scenario using Fibonacci, make sure I do this correctly. We did have on the SPYs, we did close. Looks like every day we closed just above that 0.618 area. Well, this one day we didn't, but then we did. So that this could have been a sure retracement. We could be on our way back up. So, there's a good scenario to paint both to the upside and to the downside. They left it right in the middle on Fridays, and that's very common. Usually, or I see often going into a weekend, there's indecision. it would be too obvious to leave it bullish or leave it bearish. So they tend to just leave it right at a point of indecision, so that they can take money from you by trapping you in either one way or the other. One thing I did talk about a lot last week is volume. The volume on the daily chart is making the downside case. We came down on high volume, we're retracing on lighter volume. What the volume is saying on the daily chart, at least, is that we will want to at least retest this level and potentially retest this prior level here. But one thing I do want to mention is, and I talked about this last weekend, is that on weekends it's always great to go back and visit the weekly charts. I like to go back and look at all my stocks on the weekly time frame and reevaluate. And while this daily chart does seem bearish, and Friday a lot of us were bearish at the end of the day. Yesterday when I was looking at charts and I looked at the weekly, that told a little bit different story. So I want to switch over to that. If you look at the weekly, all that does is tell us that we have a higher low from there. That's a bullish candle where we did test a lower area, and we recovered, and that recovery is on strong volume on the weekly level. So while last week we did have some distribution, we had selling on greater than greater than average volume. This week we closed above that range of last week on accelerating volume. So the weekly chart actually does paint a bullish picture. So this could go either way. So that's why I say it's really important to have a plan both ways. Know what to do. I'm still trading cautious. I don't have any positions right now because as I was traveling a lot last week. But when I do take positions this week, which I likely will, either to the short side or the long side, I'm going to be cautious because there is no clear trend right now. We are consolidating here at the top. So, but above this level, we got a swing point there, swing point here. We have the high of last week. Above that level, I'm fairly bullish. And you'll see the same thing on the QQQs. Very similar chart. We also have this level. Now we did take it out strongly in the April time frame, and then through June we kind of accelerated up. The Qs have been stronger, but above last week's high, I think we're clearly in the bullish range. So it's important to keep that in mind. So I just wanted to say don't become too bearish or too bullish at any time. It's important to be able to justify both a bearish bias and a bullish bias, and at some points you will be more bullish, and when you are more bullish and the evidence, the technical evidence that you're seeing in front of you supports that, that's when you start taking bigger positions. You take larger risk. You go in stronger, and when it's kind of up in the air like it is right now, that's when it's important to be cautious so you're not caught on the wrong side too far. Now, let me break down some stocks. Team had a really strong week last week. Other than Monday, the rest of the week was up. I took a position on Tuesday. As you know, I got stopped out, and then due to traveling and whatnot, I was not in it the rest of the week. So I really missed that opportunity. What I'd like to see tomorrow, I'd like to see a test of this level, the 143.91 level. If it tests that level again, I'm probably going to take a position. I may take a position here above the 145.96 area, but the level I want is another test of the 143.81 area. Coupa Software, also strong, held up very well, very similar chart to team. It did come down a little stronger than team before, but that's fine. Taking out last week's high could be a good trade. And then, or the safer bet would actually be just waiting to the 148 area, taking the trade right at the swing point, and then riding it higher, because you have a really nice ABC structure setting up. Sorry about that. Whoops. Amateur here. Here we go. Here. Down, and then you'll see it up. So that's price targets probably in the 165, 168 area. I haven't done the math on the measure move, but really good ABC structure setting up, and it's relatively been strong. It's been stronger than a lot of other stocks. So that's what you want. So when the market is down, you want to be looking for stocks that are doing well, and then jump on those the moment the market is recovering. Because those are the stocks that'll go the furthest, the fastest, and ideally with the lowest amount of risk. Okta's held up very well. I like it above this level, so it was hanging right out at there. So that may be a great place to take a new position, 134.03, or above the 140.11 area. Shopify, wow, Shopify had five solid straight days, and even that Monday when the rest of the market was down, Shopify was green. I probably wouldn't buy Shopify here. It's a little bit more extended than I would like. If it does pull back a little bit and test this level, 33786, I think that'd be a good buy. CrowdStrike, I like this stock. It's also held up very well. Being an IPO, the risk is high. It's already moved far and fast this year. I would trade this one a little more cautious anyway. I think the risk is a bit higher, but it held up very well, and that's very exciting. I like it above this level, this 95.40 level. So we'll see what that does, and I would get in it above that. Zscaler, I like it above that level. So it's right there as well. All of these have held up pretty well. AMD, I like it above this level. I like that level of buying. That big solid green bar with that high volume there, that well above average, and then also that buying volume is well above the downdraft days that we saw volume wise. So that's they're buyers for AMD, so I like it. Chegg, again, that has held up pretty well. That chart looks a bit like Okta's, I believe. I like it above this level. That Friday wasn't so well, but it was on light volume, so I'm not quite sure what was happening there. If it retests this level, the low of that candle, that could be a good buy, or above this 45.27 level could be a good buy. AYX, it wanted to run. It wanted to run several days last week. Had a good week last week. As you see, the up days are on strong volume. The down days, it tried to break out, and then it kind of ran out of gas there. But that is on lighter volume, so I'm not going to read that too much into that. AYX looks pretty good. BYND really didn't hold up too well. I'm actually expecting lower prices. It's probably going to retest one of these levels. This high volume day, it could be very conceivable that it wants to retest this 148.05 level. So I'd be waiting for that. I'm not going to buy into that. Smartsheet. I like Smartsheet. I like it above this one, the 49.46 level, but it hasn't. it was stronger, the last few months, but it hasn't held as strong as Team, Coupa, Okta, Shopify, CrowdStrike, Zscaler. So I have that a little further down on my list. I'll look at a few more. Roku, that broke out on strong volume, but that volume is not as high as some of the further breakout days. It wouldn't surprise me if it comes back and retest, but then again, it may keep running. It's a little bit extended for me, so I'm gonna just stay out of that. Rapid 7, I like it right at this level, this 5606 level. Again, this is another one that I think did really well. This chart looks more like smart sheets. Like it did good, but not as good as some of the others in the same categories. So I'm going to be keeping my eye on that. I like the company. I like their products and stuff. So I have a bit of a bias there. So maybe I'll take a small position there. Zillow. Really surprised by this. They got hit hard on earnings. I'm just going to let that play out. I'm going to be watching it. Not going to take any positions anytime soon. CyberArk hasn't held up as well as a lot of the other ones. It has really broken a pattern. I like the company, but I'm not gonna get in on that. Twilio, that's held up better than CyberArk. There could be some opportunity here, although it did get hit a bit harder than some of the others. So again, I'm looking at relative strength, and these top ones: Coupa, Okta, Shopify, CrowdStrike, Zscaler, AMD. Those are my winners, and those are the ones I'm going to be paying most close attention to. So what I'll do tomorrow morning is I'll see where the futures open up. I'll set my alerts, and then when the market opens, as my alerts get hit, I'll likely start to take small positions. Assuming we don't open too high or too low. I said a few times last week. A lot of times, what happens if the market's going to be heading down during the day, a lot of times I do see the pre-market open very high. May open up plus 1%, and then the rest of the day kind of trend down. But also a lot of times I see the opposite happen, where futures are low. You're well into the negative, but it turns out being a really good day. So I don't pay too much attention to the futures, but what I do like to be cautious about is kind of getting sucked into the market too early. I don't like to trade in the first 30 minutes of the market if I can. Sometimes there will be swing points that are too good to pass up, and I do take positions. But ideally it's at least after the first 15 minutes of market open. But I really try to not take any new trades the first 30 minutes, and I let prices stabilize. I let a direction set, and then I'll start to buy. But you have to do what you have to do to get the right buys at the right prices. But keep that in mind. Don't get too emotional when the prices are whipping everywhere in the first few minutes. So just to wrap this up, again, Sunday night is a good time to review all your stocks, to start to sort them out and filter the ones on your list. Which ones were strongest last week, and maybe setting up for good buy points. Take a look at those stocks and the indexes on both the daily and the weekly time frames, just to see how they compared. And then, try not to get too biased one way or another. I don't know if it's going to be an up week. I don't know if it's going to be a down week, but, I'm prepared both ways. I know what my levels are. I know what the prices have to hit to, in order for me to buy. Once I buy, I'll obviously have to determine where my stop is. and just live by my trading rules, because that's the only way I know I'll be successful, is if I follow my own rules, because that's when things break down, when I start justifying things. Well, I'll just let it go. Um, but I'm sure you all know that, and you've been caught yourself by breaking your own rules. So it's good to just kind of mentally reset on Sunday, come up with a game plan, so that Monday morning you're ready to execute. You have your top 5 or 6 stocks that you're watching. You have your alerts set, and then when those fire, you know what to do. You're not having to think during the game. You've practiced, you know what your plays are, and then you execute. You buy, or you short, or you sell, or whatever your plan is. You're ready. So Sunday really is one of the most important days when studying charts. You have both the daily perspective, but then you can look at the whole week and see how that fared, and then by looking at the weekly chart, you can start to see the longer term trends. And we've had a great long term trend this year of going up. And are we going to hit resistance here again, and retest some of these lower areas, or was this last week, a test of the lows? Lows were rejected. We have a higher low, and we're going to continue the way up. So a case could be built either way. Right now, there's some indecision. So as long as there's and then also news. Earnings. The earnings news has been fairly good this season, so no reason for that to not continue. The trade war stuff will definitely continue, and that could go either way. Either there's some more tweets, or there's some retaliation from China or something like that, or maybe a deal could be made, and then the market breaks out to new highs. So it could go either way, and it could really alter the course of where we're going. So again, be prepared for both scenarios, and and until a clear direction is set, trade light, and use this as a learning opportunity. These have been pretty hard times lately, very volatile, and if you don't know what you're doing, or you're taking too much risk, or you're trading too large, your money could be just flying out the window at that point. So none of us want that to happen. So, well, that's really all I have today. Yeah, I didn't trade a lot last week because of things going on, so I'm excited about this week. I'm ready to get back into it. So I'll talk to you guys later. All right, bye.